So traders, we are now going to look at identifying extreme order blocks on the chart. Now, as shown in the intro video, extreme order blocks will always appear at swing structure, which will always be at the start and end of trends. And the market can move away from these extreme zones, but will still come back to them at a later point. And this is because there are still unfulfilled orders at those price levels. Now, we're going to look at some hand-picked examples today, just because extreme order blocks do take extended times of periods to play out in some cases, and they are a lot more rare than normal order blocks. So in this example on the chart, we can see that price was trending downwards, started breaking structure to the upside, as shown by this break of structure by here around spread hours. So this became a swing low, which we're going to highlight in green. And we can see that price has actually broken through this swing low, turning the overall order flow bearish. If we follow price back, we can see that there was a break of structure by here. Followed by breaks of structure to the downside, which confirms this as the last swing high. After the break of structure, we can follow price back and we can see that there is imbalance here. Now, this would be the standard order block that most traders would use. If we follow imbalance back, we can see that it's actually left unmitigated by here, which means there are still unmitigated orders at this level. We wouldn't look at this just because this has been mitigated. You can see this by the candles not appearing in black. We can see that the candles are black by here, indicating imbalance. So we can actually now draw our order block from the last counter trend candle, which is this bullish candle, before all unmitigated imbalance. So if we start playing price, we can see that we've had a retracement and a break of substructure. And price comes up. Now, it does break a major high by here. Now, a lot of traders will obviously class this as a reversal of order flow, but we know that the swing order flow is still bearish. So we ignore this break because we are hoping for this supply zone to reject before continuation of higher time frame order flow down lower. So price comes up, and we've already got this by here, which we classify as inducements. This will be covered in a later video, but for now we know that there is liquidity built up for our order block, so we can actually look to place our order from the bottom of the order block with our high protected by a stop loss. We're going to put our stop loss generously above, because we know that the swing high is actually protected and it's less likely to sweep through it. And we're going to continue with price. So price has now rejected our order block, has continued downwards, and has broken the swing low that formed. Why is this a swing low, guys? Because we've had breaks of structure to the downside, followed by a break of structure to the upside by here. So this now counts as the swing low, and we're going to now wait for a break of structure to the upside, confirming the next swing low, at which point we can then follow price back, and this will now be confirmed as the last swing high. So we've now had a break of structure to the upside. Now that actually confirms this, the lowermost point, as the swing low. So we're going to highlight that in green, and we can follow price back. We can see that this was the swing high. Now that the swing high is drawn, we can actually look at this counter trend candle by here, and we can actually draw a new order block from the wick of this candle. Now, why am I drawing it on the wick, guys? This candle is very large, and it would give a very large stop loss, which means that our position size would be very small. So without doing any refinements by looking at lower time frames, we can safely assume that there is imbalance within this wick, just because this is the point that was mitigated on the last order block. And you'll find that there's actually going to be a counter trend candle within the wick if you did move down a time frame, which we will look at in a future video. So we've already got inducement, guys. So we're going to stick an order by here. We're going to put our stop loss again generously above, and we're going to wait for a tag. Now you can see that price hasn't come above this. It has rejected our order block, and we can safely look to target the swing low again. So as you can see here, guys, if we had just targeted the last swing low by here, we would have made 5.45R on that trade. And if we targeted the swing low on this trade, we would have made 6.28R. So guys, this example is a bit messy, but we can actually draw clarity by looking at swing structure. So we can see bearish major order flow by here, a reversal indicating a swing low, another reversal indicating a swing high, and then a break of the swing low. So that indicates that we are in a bearish trend. You can see the same thing happening by here and the same thing happening by here. So no swing highs are being broken at present, only swing lows. And we can see by here a very nice push upwards by here, indicating that the swing order flow has now changed. We could have actually looked to get in on trades by here during this reversal of major order flow. Now, it is much more risky. For example, you could have got it by there and there as well, but the overall momentum is bearish, so it's not going to be as high probability as looking for a long entry in this region now that the swing order flow has reversed. You can see by here that it actually did come in to a extreme demand zone, but like I said, it is a lot more risky. Now that we have this strong impulsive movement up, we can actually zoom in and look for unmitigated imbalance. Now you can see by here that there was imbalance created by here, but it was mitigated. Price came back, fulfilled orders at this region before pushing upwards. This means that there is now imbalance left by here, unmitigated, which means there are still unfulfilled bank orders still at this region. So we can simply draw our order block from here on the last counter trends candle. You can see, guys, that this was the last red candle, but this is actually the candle I'm going to use just because the wick comes above the last candle and below that. So we can safely assume that there is a counter trend candle within this candle. Just before we start playing price, guys, we're going to draw out these swing structures. So we know that this is the swing low, as we had bearish major order flow, bullish major order flow with highs being broken. This is now printed as the swing low, and this will now be the swing high. Now, it is worth mentioning that although there is unfulfilled orders by here and unmitigated imbalance, if the market is moving inefficiently, price may not actually pull back deep enough to actually reject this order block. It may reverse at some point within this entire region. What we can do then is, if price starts moving downwards like this and then reverses, we can actually start to look for a new entry within the discounted range of this price action. So we can see here, guys, that the order flow has actually reversed slightly above our demand zone. So we're actually now going to look for an entry by here, as we can see that there is unmitigated imbalance left by here. We get in the last counter trades candle before the impulsive movement that broke structure. Now this is the last order block, but is the most extreme order block there out of this major order flow. And what we can do now, if we did have an order set in this order block, we can actually look now to target the swing high. Now, it is worth noting, guys, that there is still unmitigated imbalance left by here, and you could have actually got in on another entry by here. There is clear liquidity being built up. Price does actually spike back into our zone one more time before actually breaking the swing high.